Okay, so yesterday we discussed about various penalties related to a taxpayer. So now is related to some legal liabilities. So since if you are a taxpayer or a accountant who is engaged to do something for your client, there are some liabilities that is associated with you that you have to like complete your task with due diligence. You have to be maintain confidentiality of the client's record and uh, everything. That means you are liable for your duties and responsibilities. So some of the legal liabilities that is associated with an accountant we will discuss today. So legal liabilities, basically as a tax professional may face liabilities under common law. So there are some laws that is associated with these liabilities. First is common law, client and third parties, statutory law, which include IRC, civil and criminal penalties. Next, professional standard, which is issued by AI, CPA or state board. So liabilities may be arise from negligence, like if you have done some negligence in your work, or gross negligence, fraud, breach of contract or violation. Like if you do not have perform your duties completely, or you have done some fraud, or you have done some mistakes, some negligence, and some gross negligence, which means a lot of negligence you have performed. So first is common law liability to client. So contract liability. So common law liability, under common law you have a liability which is to your client. So first is a contract liability, which is the breach of contract. Like your client asks you to perform certain task and you have not performed your duties agreed in an engagement letter, or you have performed only some of the duties and failed to perform other duties. So that will be considered as a breach of contract. Like you have left their work in between or something else, then it is a breach of contract, and your client has the privity your client has the right to sue against you. Okay, or if there is some intended third party beneficiary, like which is named in the contract, he can also have the right to sue against you because you have breached the contract. Okay, so next is tort liability. So tort liability means when you have done something wrong, like negligence, you have performed gross negligence, or something intentional, which is fraud. Ordinary negligence means you do not have performed your duty with the due professional care. You are failed to exercise the reasonable professional care which is required to do your work. So in this case it is considered as ordinary negligence. So under ordinary negligence, your client has the right to sue against you and even your third party beneficiary. Along with this client and third party beneficiary, anyone which is known and foreseen by CPA, like who is known to CPA, can also sue against the this CPA or accountant. Okay, this is called the ordinary negligence. For example, CPA failed to review obvious inconsistency, so IRS penalties will be imposed and CPA will be liable to fulfill these duties. Next is gross negligence. Gross negligence means like when you have done something extremely wrong. Okay, so reckless disregard for the truth means you are making some false statement with a reckless disregard for truth, not knowing if the statement are true or false, when you have done something extremely wrong. Okay, for example, CPA signed the return without reviewing the document, so this is called the gross negligence. So under gross negligence, again, anyone who is foreseen able to the accountant, or even some unforeseen people can sue against the accountant. Okay. Okay, anyone like who is going to rely on these of your financials and all, so he can sue against you if you have performed something gross negligence. And in case if you have performed intentionally, okay, gross negligence that means you have performed something unintentionally, but in case if you have performed that mistake intentionally, it is considered as a fraud. So under fraud, anyone can sue against you. Okay, anyone can take you the court, and you will be liable to anyone if you have performed something fraud. Okay. So liabilities to third party, as I told you that if you have performed something, breach of contract, if you breach your contract, then in that case you will be liable to your client or any third party if it is mentioned in your contract. Okay. But if you have done negligence, then under negligence, your client, your third party, as well as your foreseen people will sue against you. Okay. So these are given. Privity means your client. Near privity means that is third party beneficiary. Restatement rule said that some limited foreseeable users are can sue against you, which in case of negligence. But in case of gross negligence, any foreseen people and the people who are unforeseen, even like who are going to rely on these financials and all, in that case they can sue against you. And in case of fraud, anyone, any party can sue an accountant. Okay. Any doubt up to here?
No, Vinama.
Okay, so next is statutory liabilities. Statutory liabilities means some liabilities which are basically involve some kind of errors and all. Like if you have unreasonable understatement, your aiding and abetting, willful or reckless understatement, your disclosure of client information, your failure to sign return, failure to furnish record. So these liabilities covered under statutory liabilities, which is considered by IRC. So we already discussed these penalties, which is imposed by the IRS on various kind of these things. Okay. Next is criminal liability. So criminal liability will be imposed when you have performed something major, like something criminal related activity, like a CPA prosecuted for intentional tax evasion. Like you have evaded the taxes intentionally. You are filing fraudulent returns. You are assisting tax fraud. You are willfully failing to file the returns. So these are called the criminal liabilities. Okay. For example, CPA help client hide offshore income. So in that case, fines as well as imprisonment both will be applicable to these CPA. So these are covered under criminal liabilities when you have performed something that is uh, against the law, which include criminal activities. Okay. Is it clear?
Yes, yes.
Okay, next are defenses for CPA. Like if you are a CPA and someone has sued against you, means has filed a case against you, then what kind of defenses can you use to like escape from these punishment? So first is due diligence. Due diligence means you will first claim that you have performed the everything with due care. Like first of all you will ask that you have not performed something wrong, you have performed with all care. Okay, no duty of care, like is that work is not your duty, like you do not have performed something wrong. Okay, contributory negligence or client fraud. So what kind of defenses are applicable in cases like if you are like if you are uh, if you're sued for breach of contract, like someone has sued you because you have uh, do not have performed the duties well, they are claiming you that you have breached your contract, then in that case your defenses will be applicable, that you can say that you do not breach, or you have fully performed the under the contract terms, like no duty of care. So this will be a defense for CPA in case of breach of contract. Like you will claim that you have performed all your duties. In case of negligence, so when you have done something wrong, like you do not have performed your due professional care duty, then in that case you can defend yourself by saying that you have followed your gas method, like you have done your work with fully due diligence. And second thing, you can also claim that this is a lack of privity. Like you can ask someone if he is not covered under privity rule, like he is not a person who is a client or who is a third party beneficiary, then you can defend yourself by saying that this is a lack of privity case, like the person do not have the right to sue against you. Okay. Next is when you are sue for doing something gross negligence. So first you try to defend yourself by saying that it is not a gross negligence but a negligence. Okay. So next thing, in case of fraud, you will first defend yourself by saying that it is not a fraud, just a lack of due care. Okay, so you have not done anything intentionally. You will first defend yourself by saying that it is done unintentionally. Okay. Second thing, you can also claim that you have followed everything. You have followed your proper account, your auditing methods like gas. But in case of fraud, remember you can't use lack of privity, because in case of fraud, any person can sue against you. So you can't defend yourself by saying that this person do not have the right to sue against you. Okay. So these are some of the defenses which are available for CPA in case if he is sue against something wrong. Any doubt?
No, very much.
Next is engagement letter protection. So engagement letter protection, we already like if you have done audit, you have studied that we take engagement letter which is signed by client. So in case no one can claims that you have not done your work properly, because it will be a written understanding between you and your client, where you will mention your scope of work, your responsibilities, so that an auditor is not like liable for anything in future, or he may use this engagement letter as a protection against him. Next is privilege, communication, confidentiality, and privacy act. So attorney client privilege, we already discussed that if a client comes to you and gives you their information, that it is a kind of you have to maintain confidentiality between you and your client. So protect confidential communication between a client and attorney made for the purpose of seeking legal advice. Not automatically applicable to CPA unless the CPA is assisting the attorney. Apply only in legal proceeding, not the IRS audit. Next, accountant client privilege. Again, it provides limited privilege to federally authorized tax practitioner. So it applies only to tax advice, not a tax return preparation. Does not apply in criminal matters, like if something is found something is found in criminal matter, then this information will not be considered as privilege. You have to show this information to the court. Okay.
Okay.
Next is work product doctrine. That means protect material prepare in anticipation of litigation broader than attorney-client privilege may applies to accountant if working for an attorney. Okay, so confidentiality responsibility we already discussed that CPA must not disclose client information to anyone without their consent. But there are some of cases that he may disclose the client information without their consent, like for example, in case of subpoena or a court order, in case of peer review, in case of response to ethics investigation, or when required by the law. Okay. So in this case, like if you receive some subpoena, summon from court, if you have some peer review which is conducted by AICPA, some quality review, some investigation raised by AICPA, your state board or IRS, then in that case you can disclose your client information without their consent. Otherwise, you have to maintain confidentiality between you and confidentiality of the client information. Okay. Is it clear? So IRS privacy rule, federal tax return and return information are confidential. Is it clear? Have you left in between or
No, it's clear.
okay. So IRS privacy rules, federal tax return and return information are confidential. IRS employees and tax practitioner must protect taxpayer data. Unauthorized disclosure leads to the penalties and imprisonment. Okay, so IRS rules say that the all the information should be maintained confidentially. Uh, Employees and taxpayer must protect the taxpayer data. So if you are a tax practitioner or you are a IRS employee, so it is your duty to maintain confidentiality of their data, and any undisclosed, unauthorized disclosure will lead to penalties and imprisonment. Okay, so these are not important. Graham Leach Bailey Act. So it basically require financial institution like tax prepare to protect client financial information, may provide privacy notice to client explaining data handling, require safeguard for electronic and physical data. Next, HIPAA applies if taxpayer handle patient health information, require proper authorization for any disclosure. Electronic privacy requirements, so practitioner must sign electronic data. E-filing rules require adequate protection of the taxpayer information. So these are something related to the confidential part only, and you can also skip them because these are not important. But this is important that in what case you can disclose your client information. Okay. So any doubt in this PDF?
No, madam.
Okay, then let's do some questions. Okay, first question. Which of the following activities would lead to civil and criminal penalties which is imposed by federal income tax laws?
D fraud.
Okay, and what about Shravani?
Yes,
So are you both going with option number D?
reading, ma'am.
Okay.
Ma'am, can you explain?
Yes. So it is asking that in which case, in which of the following activities will civil and criminal penalties will be applied to a taxpayer? So since we discussed that negligence part will come under common law liability, substantial valuation overstatement, substantial understatement of income taxes. So these are liabilities which is imposed by IRS. Okay. But in case of fraud, it comes under civil and criminal penalties, means you will be subjected to fines as well as imprisonment. So we discussed it today. This is criminal liability. So in case of any fraud, you will be subjected to criminal liabilities, means some fines as well as some imprisonment. In case of statutory liability, like if you have done something unreasonable understatement of some taxes, or any willful or reckless understatement, or you have taken any position which do not have substantial authority, then it will be subjected to the liabilities which is imposed by IRC. But in case of fraud, here it comes under criminal liabilities. Okay, it will be considered as a criminal act. Any doubt? Is it clear or any doubt?
Clear, ma'am.
Okay, then next question. Able CPA was engaged by Wedge Corporation to audit Wedge financial statement. Wedge intended to use the audit report to obtain a 10 million loan from Care Bank. Able and Wedge president agreed that Able would give an unqualified opinion on Wedge financial statement in the audit report, even though there were material misstatement. Care refused to make the loan, which gave the audit report to Wrench to encourage Wrench to purchase 10 million worth of Wedge common stock. Wrench received audit report and relied it on to purchase the stock. After the purchase able agreement with Wedge president was revealed. So as a result, Wedge stock lost half of its value and Wrench sued Able for fraud. So what will be the result of Wrench suit? So please read it carefully. Take 2 to 3 minutes to read this question. Are you getting this question or should I explain? It is related to like who can sue.
Can you explain?
Yes, sure. So Abel is a CPA who is engaged by which corporation to audit the which financial statement. Okay. So he was engaged by some corporation to audit their financial statement, which intended to use the audit report. So what was the purpose of this audit? Which was going to use this audit report to have some loan from the Care Bank. Okay. So Abel and which president agreed that. So Abel and this corporation's president, they mutually agree that the Abel will give an unqualified opinion, means a clean opinion on the financial statement, even though there are material misstatement. Means financial statement were uh, materially misstated, even though he is agreed to give the unqualified opinion on the financial statement. Unqualified means clean opinion that everything is fine. They refused to make the loan. So bank first declined the loan, but when the wedge give them audit report, uh, it agreed to give the 10 million loan. Uh, sorry, wedge then gave the audit report to Wrench to encourage Wrench to purchase 10 million worth of wedge common stock. So although Care, that is a bank, refused to make the loan, but wedge, that is the corporation, give the audit report to Wrench to encourage Wrench to purchase 10 million worth of wedge common stock. So he gave this audit report to someone else who is Wrench, and Wrench is agreed to be a part of this corporation, means by uh, contributing 10 million and purchase their common stock. Wrench reviewed the audit report and relied on this report. That means he is the party who is relied on that audit report. But after the purchase, Abel's agreement was revealed. So after this purchase, the auditor and corporations agreement was relieved, means comes out, and as a result, which stock lost half of its value and Wrench sue Abel for fraud. So this third party is sue against this CPA. So what will be the result of Wrench suit? So now have you got the question? So basically, we have first Abel, who is a CPA, and Wedge Corporation. Okay, so Wedge Corporation was a client of CPA. So they make an agreement that he will give unqualified opinion on his financial statement, even though they are false. So this audit report was used by some third party, which is Wrench, who make an investment on the basis of this audit report. But when he suffered the losses, his Wrench sued the CPA. So what do you think? Which should be the right answer in this case?
Option B.
So first option said that Wrench will win because Abel intentionally give an unqualified opinion. So since it is an intentional act, that means it is a fraud. So that means Wrench can sue against the CPA. Second option said that Wrench will lose because Wrench is not a force in user of Abel's audit report. So since Abel doesn't know that who will use this audit report, that means Wrench is not a privity to file against the auditor. Third option said that Wrench will win because Abel is strictly liable for error made in auditing wedge financial statement. So since Abel is liable for errors which he has made, so that means Wrench can file against him and he will win the case. Wrench will lose because Wrench is not the privity with Abel, means not the right person who can sue against Abel. So what do you think?
Option B.
Okay, and Shravani? Okay, so I will give you some hint that since Abel intentionally gave the unqualified opinion, means he has done this act intentionally, not unintentionally, he has done intentionally. So that means it will be considered as fraud or negligence. If someone has
Can
done
be option
intentionally.
A,
Okay, so first tell me that it will be considered as fraud or gross negligence or negligence.
fraud,
Fraud, because he
because
has
it is
done
intentionally.
intentionally.
Yeah.
So, in case of fraud, anyone who may or may not be foreseen by auditor or accountant, anyone can sue against the accountant if it is a case of fraud. That means, even though Wrench is not a foreseeable party by the auditor, but still he can sue against the auditor because he does this act intentionally. It is a case of fraud. So, right answer will be A. Any doubt?
No.
Okay, next question. Which of the following is the best defense a CPA can assert in defense to suit for common law fraud based on their unqualified opinion on materially false financial statement? So, what should a CPA can use in his defense when he is found liable for some fraud based on the unqualified opinion on material false financial statement? So, in case of fraud, what is your first defense?
Option B. Contributory negligence on the part of the client.
And Shravani? Okay, so in case of fraud, a CPA first claimed that he has not done this act intentionally, but it is due to some unintentional error. So first he tried to defend himself by saying that it is not a fraud but a negligence. Okay, negligence. So he will say that it is a lack of center. Uh, this is the right answer. So the word used for his defense when he said that it is not a fraud but a negligence. So it is called as lack of center. Okay. Okay. So first he tried to defend himself by saying that he has not done intentionally, but it is a mistake that even he don't know about that mistake, which is due to some unintentional act. Okay. Any doubt? Any doubt?
No, ma'am.
No.
Okay, next question. Interest on a tax deficiency began to accrue on date on which?
Option A, when the tax was due.
Okay. Both are going with option A. Both of
Ma'am, option C.
okay. So it is saying that if you have some tax deficiency, so you have to pay some interest to the taxpayer. So in case of interest, it will be applicable on which date? It start accrued on which date? So when the tax was due without regard to extension of time to file. So you have to pay your taxes by due date. You do not have any extension for tax payment. You only get the extension to file. So that means if you fail to give your estimated taxes by due date, then from the due date, your penalty will start to apply. Okay. So date is when the tax was due. Is it clear? Is it clear?
Yes.
Okay. Next question. Which of the following statement is correct regarding a CPA work papers? So CPA work papers must be. So since CPA work papers are a property of CPA, but since it contains client information, so what is the responsibility for CPA in this case?
Option D,
Okay, and Shravani,
Ma'am, option C.
since the work papers are a property of CPA, why will he give it to client? He only has the duty to return the client record only. He he will not give his work papers to client.
Ma'am, then option D.
Yes. So option D is the correct answer. So your work paper is your property, but it has client information. You have to maintain confidentiality. But in case if there is a subpoena comes from court, then you can disclose them to the court. Okay. Next question. An accounting firm was hired by a company to perform the audit. The accounting firm knew that the company needed the audit report. So, okay, accounting firm knew here that the company used this audit report in order to make some loan. Bank lent $500,000 loan to the company based on this auditor's report. Okay, so here this party is foreseen by the auditor. That means auditor knew about this party that who is going to rely on this audited report. 15 months later, the company declared bankruptcy and was unable to repay the loan. The bank discovered that accounting firm failed to discover a material overstatement of the asset. So which of the following is correct regarding a suit by bank against the accounting firm? So if a bank sue the accounting firm, then what should be correct? So first read the question carefully and determine what should be the case. It is a breach of contract, negligence, or fraud or gross negligence? Any guess what should be the right answer?
Option C.
Okay, and Shravani?
Ma'am, options.
Option? So both of you are going with option number C or other?
Ma'am, C.
Okay. Yes. So since the auditor accounting firm give are failed to discover a material overstatement of asset, that means they have uh, they do not have performed their duty with due care. That means they have done negligence or gross negligence in preparing their audited reports. So in this case, since they know about that this audit report was used by a bank, that means this third party is foreseen by an auditor. So this is a case of negligence and the party is foreseen by auditor, means known to the auditor. That means they can sue against the accounting firm for the loss of loan because of negligence. Okay, is it clear? So both of you are correct. Okay, next question. To which of the following party will be a CPA liable if the CPA fraudulently issues an unqualified opinion? So if he done some fraud, he gives an unqualified opinion on a financial statement which are actually materially misstated. So to whom he will be liable? Corporate shareholder or bondholder or both?
Ma'am, both.
And
Both.
Shri,
Option A.
why? Why both? So since this is a case of fraud, so in case of fraud, any party can sue against the CPA. So both of will be considered as privity or will sue against the CPA. Next question. Beckler and associate CPAs audited and gave an unqualified opinion on financial statement. These financial statements were materially misstated. They were contain misstatement which result in material overstatement of Queen's net worth. Means there were some misstatement even though they gave an unqualified opinion. So Queen audited the financial statement to Mac Bank in connection with the loan made by Mac to Queen. Beckler knew that financial statement would be provided to Miss Mac Queen defaulted on the loan. So Mac sued Becker to recover the losses. Which of the following must Mac prove in order to recover?
Both 1 and 2.
And I'm option A.
Okay, are you sure? This is the wrong answer. Please read it again.
Then option C.
So they are not asking about the defenses a CPA can use against him, but they are asking that if a party, which is a MAC, so MAC basically was the bank who gave loan to the Queen Corporation. So if MAC sued the Beckler, means CPA, to recover his losses, then which of the following must MAC prove in order to recover? So what must he prove that uh, to sue against the Becklers? So Beckler was negligent in conducting the audit. Mac reliance on financial statement forced Mac to extend the loan to the Queen. So what which of the following must be approved? Okay. So since here the CPA has intentionally given unqualified opinion on the financial statement which are actually wrong, and they knew that someone is going to rely on these financial statements, still they given wrong opinion. That means it is the case of gross negligence or a fraudulent activity, means which has done intentionally. So in case of fraud, any party can sue against the auditor. So that means they do not have to prove that the auditor was negligent or they may have relied on this financial statement. Means they do not need to prove the auditor's negligence, or they do not need to prove that they are the foreseen people who can rely on this financial statement. So in case of fraud, any party can sue against the auditor. So that means neither of these two will be proved by the MAC in order to recover their damages. Okay, any doubt? Any doubt in this question?
Can you
No,
explain
ma'am.
again?
Okay, sure. So since the auditor here gives the unqualified opinion, even though he knew that The financial statement contain material misstatement, and the party like to whom they are giving the audit report will going to rely on this audit report. So that means this is an act of gross negligence, or you can say even fraudulent activity, because he has intentionally did this. So in case of fraud, any party can sue against the auditor and recover their damages. So that means they do not need to prove that this is an act of negligent, or they do not need to prove that they are the person who can sue against the auditor, because anyone can here sue the auditor and recover their damages. Okay.
Got it.
Okay. So okay, okay, then we will continue this question from tomorrow. Okay.
Okay.
So please revise this topic, and if you have any doubt, you can ask in next class.
Okay, ma'am.
Okay. Sure. Thank you. Bye bye.
Okay, bye.
Bye, ma'am.
Bye.
Thank